All right, what's going on, tycoons? What is up, traders? Super excited for today's video on ROSE. Okay, we're going to break down ROSE. We're looking at the daily chart as always. And in my last video, I gave you guys the blue breakout level. That was our major support level. Once we broke through that level, we had 3 price targets to the downside. We've found support, all right around here at 0.03761. You can see, that flipped to a little bit of resistance. We broke through that, and our previous area of support at 0.04012 is now acting as a valid resistance. If we zoom in, we can see that we've gotten rejected there 4 times. So in today's video, we're going to go over, these levels right here. We're going to cover these. We're also going to take a look at our MACD, okay, because the MACD is very useful, especially in a bear market for, spotting potential exit signs, okay, and helping to predict possible big crashes. Now, we're also going to cover these 3 levels right here. These are our major retracement levels. These are very important as well. The 61.8, the 50%, and the 38.2 are the 3 major Fibonacci retracement levels that you need to pay attention to and you have to start using, okay? If we go ahead and, look at a few examples, I'll show you guys how it works, right? So we're going to break down the chart real quick, just so you guys can see and truly understand how it works, and then you can combine it a little bit with the MACD as well. So what I mean by that, if we take a look, this is our MACD sell signals, all right? When you get this red line crossing below the white line, that is going to be an exit signal, all right? So you see red line is trading up, and then boom, we crash, we start trading below it. Look right here. This is where we got our MACD sell signal. We got a large move to the downside afterwards. Now, right here is going to be our first example of the retracement levels. So, we have this large move to the downside, we retrace up, and then we continue that downtrend because nothing moves in a straight line up or a straight line down. What you do is you move up, retrace, continue higher, or you move down, retrace, continue lower. Now, you can use these 3 levels because these are the 3 most common and well-respected retracement levels there are. If we were to break through these levels on a downtrend, right, that would be a reversal. So you can use this to spot a trend continuation or a trend reversal, right? If we would have came down, broke through these levels, we could have gotten a possible reversal. But instead, we got a clean rejection right around our 38.2. Over here, we see the same thing. We move down, we come up, get rejected right around our 61.8 and continue that downtrend, right? But you can use chart patterns, you can use multiple things together to really give yourself a better entry and exit, okay? So right here we have like 3 or 4 or 5 things even really all aligning together. The first one is going to be this chart pattern known as a rising wedge, all right? So we're zigzagging in between this price action. You break this trend line here to the downside, you can expect a strong move to the downside. Then we get a MACD sell signal. So not only do we break the trend line right here on this candlestick, we get a MACD sell signal. We see that we rejected our 61.8% retracement level. Yes, we wicked above it, but we did not close there, right? So it's respecting it. If we would have closed above and tried to hold support, then that could have been it. Also, we had this major trend line here in green. This was our bull market trend line, right? And you see we had bounced multiple times off of this trend line, bounced again here we broke it, and we got a clean break and retest, right? So that's a very common thing you'll see a break, a retest, and then a continuation, right? And we would know this simply as a retracement. So a lot of times you get retracements of measured trend lines to retest those or to look for if it can go back within the trading zone. And we can see multiple times, we have this move down, we retrace up to the 50%. So that's why we're looking at it on today's current price action and today's current chart. Now, take a look at our MACD. Our MACD looks good right now, all right? We don't see any signs of a MACD sell signal. We see the red line is trading above on, on ROSE. So, we do have a little bit of bullish momentum. We had a nice move to the upside, but if we zoom in some more, we can see that we got rejected at our previous breakout level to the downside of 0.04209. So in order for us to go higher, we have to break through these 2 now resistance levels of former support. So we have to break through 0.04012 and 0.04209. If we are able to break through those levels, then we have our major retracement levels to the upside that we really need to break through as well, right? So you see we have this major move right here to the downside. Okay, we could break through these levels. And if we do, we need to be very cautious at these three, because I just showed you guys many examples of how we come down, we retrace up to the retracement levels, and then we continue that trend downwards. So 0.04839, 0.05304, and 0.05768 are going to be your three major retracement levels, just to be cautious of, right? Now, we really want to hold support here at 0.03761 if we do get some type of a pullback, right? Now, we've already started to pull back. If we find some support here and along this area, there's a good possibility we could potentially come up to our 38.2 retracement level. All we have to do is break these resistance levels right here that I mentioned. All right. So I'm not trying to come off super bearish and saying that this thing has to go down, or that, I'm not trying to come off super bullish and say that we're, about to explode to the upside. I'm really just giving you guys some honest, unbiased feedback on what's going to happen, right? And the necessary steps for those things to happen. We have to break through these resistance levels. And if we do, you need to be cautious trying to long here, right? I wouldn't throw a big bag. What you would do is you would look for it to, test these levels, break out, retest, and then get that move, right? So we have a high here. We need to create a higher high for us to actually get a reversal and start a new trend on the daily chart. But for now, we have a high, we have a lower high, we have a lower high, we have, low, low, low. We're creating lower lows and lower highs. So until we're able to, come up to these levels here, all right, that's when we have the possibility of making a high and then a higher high, and then ultimately taking out this high and trying to make another higher high. So those are really all the main levels that I'm watching. There's no really chart patterns currently that I'm looking at or, seeing. We did have a little bit of a double bottom here, and we did get a nice bounce off of that, but that move has already played out. Okay, if you take a look, we zoom in a little bit more, we can see right here is where this candlestick opened, right? So this candlestick opened here at our major level. We got the move, we came down, made a double bottom, and we played out a nice W pattern. Okay, I'll actually make this white real quick so you can see. We played that out very nicely. We wicked up, and we're still rejecting this level right here very well. So until we break past those two levels, most likely we're going to consolidate and test our support level down here and possibly head down lower to 0.0304. But if we break above this level, then we have our major retracement levels up here. These could be some valid bullish price targets for you guys, to look out and see if we're going to be able to get some momentum up there. We could get some type of a 5-wave impulsive move, right? We could get a 1, 2, 3, 4, 5 and take us up to these levels. That'll be really interesting to see how it's going to play out in the future. There's a lot of data coming out, such as CPI, and then we have the next FOMC Fed meeting in February. I know that those mostly pertain to the stock market, but believe it or not, there is a large number of institutional investors that invest in cryptocurrency based off of, interest rates and where the Fed is going with the interest rates, because at the end of the day, cryptocurrency and blockchain technology is just software. Big institutions know that, and right now technology and high growth technology companies aren't really a safe place necessarily in investors' eyes. So that's why we're seeing such big dramatic drops in tech stocks and such big dramatic drops in altcoins and Bitcoin, is because they're very similarly correlated when it comes to institutional investors. And that's really where you're going to see the big moves. That those are the true whales out there. The whales that are buying things in bulk and really moving the market are going to be those people. So that's it for today's video. Appreciate you watching. Smash the like button, subscribe if you're new.